Alright guys, welcome back. So it's been a while, so let's have a look at SPX S&P 500 update. So today is down 1.5% after Jerome Powell. And if we take a look at the daily, we just stopped right at that 50-day moving average. If you take a look at the chart, yellow line represents 50-day moving average, and if you look at the 200-day moving average, which is at 393, so that's the level I'm watching going forward from here. Basically, we have in a week also the OPEC's option expiration date. So if we do close above 200-day moving average, we're still in an uptrend. Because if you take a look at the overall market, yeah, we are in February pretty much down and doing absolutely nothing. This is basically February, but we started the month in a high note. But this all selling, this pullback, I'm not going to call it like really sell off, but it's just a pullback to the moving averages, basically half of what we had rallied for. So let's say from 377 all the way to 415, we're pretty much halfway down. So if it does slip below 392, I would be really careful. And also we do have FOMC in 14 days, so Fed rate decision. Also, if you take a look at the stock percent of stocks that are above 5-day moving average, 20-day moving average, 50-day moving average, 100-day moving average, this is not in your favor so far. So we can definitely see some choppy back and forth markets, and also keep an eye on put to call ratio. If it starts spiking, that means people will be positioning for some more downside move. And if you take a look at the year-to-date performance of the S&P 500 components, you can see still same sectors: technology, communication services, cyclical names are doing well, while healthcare names are down, consumer defensive down, energy is pretty much doing nothing, but oil and gas down still year-to-date. Utilities, they are down pretty nicely as well. Basic materials holding up, financials slightly positive as well, and some names are really nicely positive, such as looks like American Express doing well in that sector. But yeah, that's what's going on. And in terms of upside move, well, we do have this. Yesterday we got this, a lot of people call it shooting star. So this is a bearish candle. When market opens higher and goes higher and then closes negative for the day, that's a bearish sign, and that's why you saw this type of a pretty big move downside today. A lot of people will say it's because of Jerome Powell, but even if it wasn't Jerome Powell, we would have seen some sort of a pullback, because we felt that selling pressure. But everything is happening with not too much of a crazy volume. You can see this whole time SPY volume was below 100 million. So that's why you can maybe take a look at the VIX and say that volatility is not doing much, because, well, not many people are still scared or panicking, and maybe they have hedges in place for longer term. And also, yeah, the yields, a lot of people keep an eye on yields, 2-year, 10-year focus right now. So those have been hitting new highs, and that's a sign that Fed may not stop and maybe even go for slightly higher. And even if they pause, they might pause for they may not cut right after the pause. They might just keep the rates until, well, as a famous saying, until they break something. And I don't want to go too far, but that's the update. That's the update for SPY. That's what I'm watching. And yeah, sorry about that. We have been away for quite some time, but yeah, let's keep an eye on this, and I'll update hopefully every day. Thank you. Take care. Peace.